Hello and welcome back. I'm Benny Victory. I've made this video for my business partners that are financial advisors and insurance professionals, and if you'd like to share it with your clients, information that could be really relevant when they sit down with you to do your initial fact finding. I know when you sit down and you speak to the clients, you try to identify the problems and the concerns that they have and try to provide them the services that you offer that could be significant during their retirement or after they're gone to help their estate or their family members that are left behind. These are products that we're talking about like life insurance, annuities, especially long-term care, disability insurance, and investments. Right now, the cost of long-term care insurance, as far as if it's coming out of pocket, is significant. And if you're able to assist your clients to be able to afford that insurance, you would be really serving them as a financial advisor, as an insurance professional. I know that a lot of the conversations with the clients go something to the effect of, we understand its importance, we don't disagree that we need it, we simply can't afford it. And that's usually where the conversation starts and ends. Some other times when the financial advisor or insurance professional really pushes and does the fact finding and goes deep during their discovery, they identify that the client still has a mortgage, and they try to suggest about if there's an opportunity to refinance their mortgage to lower the payment a little bit, and maybe with that $100 or $200 that they're able to find through the refinance, maybe they could afford a little bit more coverage or start new coverage. The financial advisor and insurance professional with that thinking is on the right track, but there simply isn't enough money to really make an impactful change for the client. The conversation around being a partner and a business partner with someone like myself, a reverse mortgage specialist, is that when you do your discovery and you find out that your client has an existing mortgage, whatever that mortgage amount is, then we could talk about if that client wasn't paying $1,300, $1,400, $1,200 for that mortgage payment and could still stay in their home during their life and their partner or spouse's life, now you have a significant amount of money, and what could you offer them if you have an extra $1,300, $1,400, $1,500 a month every month, and the client doesn't have to make that mortgage payment anymore? Taken one step further, if you could have a conversation with the client and say, I understand you have a small balance on your mortgage, and through a reverse mortgage we could pay that off, so not only does your payment go away, but we could be looking at having a line of credit in place, so that line of credit could grow over time, and it would be a standby line of credit to help you with your future expenses. Now, not only have you made their existing mortgage payment go away, but you've added a layer of protection by having a line of credit that's a standby line of credit to help them. This could help them in case of added in-home care or provide for the insurance premium that they need for extra offers that you could present to them. For example, I just want you to consider that a $200,000 mortgage at 3.5% produces an $898 payment. A $300,000 mortgage at 3.75 produces a payment of $1,389. In either of these cases, with a reverse mortgage, you could potentially have this payment go away, and the client who had to make this payment for their mortgage now could use and pivot and use this money to pay for insurance premiums. Furthermore, there could be a very easy conversation around getting them the line of credit. I'm closing a deal for a client that is age 73, property value of $725,000, and getting a line of credit, a standby line of credit, in the amount of $346,000. And that's $346,000 after the fees and expenses of the reverse mortgage are accounted for. So here, the property, even though it's only $725,000, the client has access to $346,000 that they don't have to make monthly payments for. And now the conversation with this client becomes, If he needs to have in-home care, he could afford it. If he wants to get additional life insurance protection for his estate afterwards or for his spouse, he could afford it. I want you to think about this concept as a professional in terms of your past clients, your existing clients, and the prospects that you've spoken with. How many instances were there that you sat down with a past client or an existing client or someone who's even interested, but at the end of the conversation, as much as they wanted to, they simply couldn't afford the service that you're offering? With this information and with what we're talking about, you have an opportunity to help your clients to not only age in place, but to have financial security and financial dignity and freedom. The videos that I have in the channel are intended to kind of scratch the surface and give you some information to kind of be on the same page when we speak, and then from there it's tailor-made to what your clients need and what you need in specific to have addressed. I hope this video is helpful to you and to your clients, and we have a chance to connect and speak and see how we could partner up and assist. I look forward to speaking with you. Have a great day, and thank you.